Come on in, come on in. I wanted to do a live to talk about the state of the real estate market as of November 2024. Welcome, welcome, welcome. Today I had a meeting at the office to meet with a client. So I said, while I'm here, let me go ahead and record some videos, do a live for you guys, and talk about the home buying process and what's going on in the real estate world right now. So, without me being biased, I'm not with any party. I'm with us, the community, helping people build generational wealth. So, I have no opinion one way or the other. I do know that our government is here to take care of us. We pay them to take care of us, and I don't feel very taken care of. So, let's talk about everything's going on. It's been a lot since my last time going live. We had the government shutdown, which has now ended as of today. Was today November 15th, 2020, 2025. The government is officially open. I had a client that was furloughed through this shutdown and she went back to work yesterday. Yay! The SNAP benefits have been reinstated, so people are now getting their SNAP benefits. Yay! But 40 days of this is absolutely ridiculous. I don't think they came to a solution for healthcare, but let's pray that everyone's able to afford their health care and larger companies who are billionaires can come up with better affordable plans for the average American person. That's my prayer for right now. But I'm getting into the real estate market. What does it look like? The real estate market is still going as usual. Now that the government is back open, we should not experience delays when it comes to processing and underwriting loan. So that has gone back to regular, normal business as usual. Now, the interest rates are still holding steady at a lower rate. With the shutdown and everything that's going on in our government, I am not sure how long that's going to last, but the feds have agreed to meet later on in December to talk about doing another rate cut. So hopefully that comes and that rate cut affects the mortgage market positively. Now, I've explained it before, explained what the government rate cut means, the Fed rate. It is for larger investors and businesses who fund the loans, right? So that rate cut is done to make loans affordable to give, right? And whatever the larger banks that get the money from the government and they lend it to us, they give them a rate cut so they can in turn give us a rate cut. Hey guys, whoever's joining me, I can barely see, but hi, thanks for joining. So that's what the Fed rate means. So hopefully, prayerfully, the interest rates will continue to go down as the new year begins. But the Feds are scheduled to meet again late next month to talk about another rate cut. And hopefully that positively affects the real estate market. Okay, so let's talk about the shutdown and the impacts that that had on people. A lot of people who worked for the federal government were furloughed. A lot of nonprofits and other organizations that depend on government funding had to cut a lot of their programs. So there are a lot of people out here who are unemployed. The unemployment rate is going up. Food is still not affordable. And people are now getting back to the point where they want to do what you mean boycotts the holidays. We don't want to buy anything. We want to make sure that we are okay financially. And those who want to boycott and rise up against the government, I salute you. We're here. We're in this together because it's us as the American people who are being affected by the choices of the people who sit in those seats in Congress and Senate, Supreme Court, and the White House. So it's up to us to vote when the time comes, and it's up to us to resist when the time comes, if it's affecting you, because it's affecting all of us. So, real estate market is still moving. There's plenty of inventory on the market. When there's plenty of inventory on the market, it becomes a buyer's market. Buyer's market is where there are more houses on the market than there are buyers. So the sellers are more likely to want to negotiate with you to give you a better rate when you go to purchase a home. So it is still a buyer's market. Now, the seller's market means that there are less houses. There's more buyers on the market than there are homes available. So that's when, people are bidding more money on houses and they're waiving any type of closing cost assistance because they just want to win that bid. There are certain houses that may have 2 or 3 bids on it and about 4 or 5 people trying to buy it, and that's when it becomes the seller's market. So right now we're still in the buyer's market. Sellers are willing to negotiate. People are just trying to sell their homes and move on. So that is good for buyers. Now is a great time to buy. What is it? November the 15th. On average, when you go under contract for a house, underwriting takes anywhere between 14 and 30 days. I have closed a loan in 30 days. So if you are ready to buy a house and you say, I want a new house for Christmas, it's still time for you to get your application in, get your, what's your prediction for next year? I'll get to that in 1 second. It's still time for you to get your pre-approval, go look for a house, get under contract, and be in your house before the year ends. So there's still time to do that, but you need to do it now. You need to get started now. You need to call me today, and I get your pre-approval working, and you can get out and start shopping for a house. So if that was your goal, that was your plan, you're back to work, you have steady income, your credit is decent, you have reserves, money and savings, you're ready to buy a house and we can get you in by Christmas. Hey, so my prediction for next year, we have to stimulate the economy in some way. And I believe lowering interest rates and making home buying more affordable for people is what's going to do that. And I believe the people in power believe that as well. So that's why they voted to have another meeting to discuss cutting rates. Now, if they go in and they cut those rates again at the end of December, then next year is going to be looking great. When the spring market opens up, it's going to be looking great. But again, that all depends on all of the new proposals that they have out. The 50-year mortgage. Let's talk about that. 50-year mortgage will be amazing. However, you pay more money in interest. It's going to be amazing because it's going to help more people qualify and it's going to help you have a lower monthly payment. The cons about that is you're going to pay 3 to 4 times more in interest. Sorry. So you think there are jobs? Jobs, I don't know. The job situation is tricky because we have to create jobs. And if they're cutting funds to all of these different companies, they're cutting nonprofits. I was working at a nonprofit early on this year. They cut out funds and they closed our program. There's no more housing program. So it depends on where they're going to allocate these funds and how they're going to feed into the economy so people can have thriving businesses and start building more. Now, I feel like the jobs are going to be more in IT, AI, infrastructure for the new green incentives and all of that stuff. So I think if you're thinking about switching careers and if you're thinking about the jobs that are going to come open, I think the jobs you should be looking at is the IT field and maybe take some of the free Google classes or sign up for a short class where you can get some certifications because that's the new wave. The IT industry is about to take over everything. The AI industry, the green infrastructures, those are about to take over everything. And I think that's where most of the jobs are going to open up. Because those are new industries, but I'm not an expert in jobs, so I can't really speak on that. But I do know a lot of states are pumping money into nonprofits to try to help alleviate some of the burden that's happening on people. So I think in the nonprofit world, jobs are about to start opening up too. So that's my own opinion. That's what I'm seeing, but I'm not a professional in that area. You're thinking about, yeah, I would say retire. I would say make some smart investments and retire. Uh, we do have a financial department here at Mortgage Experts who can help you make a retirement plan and help you with some smart financial investments. The biggest thing is making sure you have income when you retire, because we don't know what's going to happen to Social Security, all of that stuff. But if you're at the age with your job that you can retire, I wholeheartedly believe it. I wholeheartedly recommend it. Go somewhere on an island and sip your mai tais. I saw a reel on Instagram. This is way off topic. There's a beach town in Africa called Mauritius. They pay people to come there and retire, and the only stipulations about that is that you cannot work. You have to have your retirement going into an account there in Mauritius, and you live for free, and you cannot work. They want people to come there and retire. So that might be an option too. Look into that. So if you're getting Social Security or some type of benefits from your job when you retire, go there and live for free. It's a beautiful place. Look up Mauritius on Google. It's beautiful. I am in Washington, D.C. Our office is in Upper Marlboro, Maryland, right outside of D.C., about 20 minutes outside of D.C. Yeah, 3 years. Yes, that's awesome. I would love to retire. What do I think of the president? I don't want to say on this platform, uh, but I don't want to get into politics on my page because the president don't like people that talk bad about him. He might take my page down or something. So I don't have an opinion on that one way or the other, but I do. Let's talk offline. I inbox you. But I do know that the 50-year mortgage could be a great option for people who are doesn't make a lot of income and needs it to be a little bit more affordable. The only thing about that is that there is something called an amortization calculator. Amortization. I can never say that word, but y'all know what I'm talking about. Amortization schedule when you get a house. Your interest is compounded. So every month you're charged interest based upon the balance that's left on your loan. So you pay your bulk of interest up front. So keep that in mind. Even with a 30-year mortgage, 50-year mortgage, you're going to pay way more interest, and it's going to be slower for you to add equity to your home. So keep that in mind if you get a 50-year mortgage, and if that becomes an option, it'll get you in, but you have to be disciplined enough to pay towards your principal balance outside of your regular monthly mortgage payments. So even if you pay the extra $500 every 6 months or something towards your principal balance, your interest is compounded monthly based upon what your principal balance is. So if you start paying money towards your principal balance, then you're paying less interest on that loan. So the 50-year mortgage could be a great opportunity if you're disciplined enough to pay more money towards your principal balance. If you are not, then over 50 years, you're going to pay 4 times the amount of interest than you would on a 30-year loan. So that's what I'm going to say about that. We saw if you guys say something, amen. My mama taught me that. So as far as the Fannie Mae headline, y'all might have saw that. Fannie Mae is dropping its minimum credit score stipulation. Minimum credit score for Fannie Mae was 620. Fannie Mae does conventional loans. So there's the FHA, conventional, VA, USDA, and then all types of other loans. But those are the main 4. USDA, FHA, conventional, and VA. Those are the QM loans. Fannie Mae offers conventional loans. And they offer conventional loans. They're like the competition to FHA for first-time home buyers. You can buy with 3% down. With conventional loans, you pay private mortgage insurance, PMI. Your mortgage insurance, how much you're going to pay every month for mortgage insurance, depends on your credit score, right? So that could be one issue. Now, if you have a really low credit score, Fannie Mae says you qualify, but when they go to calculate how much you're going to pay for your PMI, it's going to be through the roof. Your credit score also determines what your interest rate is going to be. So even at a 620 credit score, your interest rate could be in the 8s or the 9s. So just imagine if you were lower than that. So all of these factors still play a part. For example, VA loans don't technically have a minimum balance, a minimum credit score. You can get a VA loan with any credit score as long as you qualify through the automated underwriting system. They have an underwriting system called GUS. And once we put your application together, we run it through GUS, and GUS spits out whether you're approved or not, no matter what your credit score is. It looks at your entire profile, looks at your history, your reserves, the money you have saved up. And it looks at your income, and it also looks at your other bills like your how do you pay your rent and your utilities, your credit cards. All of that stuff plays a factor in whether you're approved or not. So it sounds like Fannie is about to do the same thing that Gus does, but it still has to be approved by the AUS system, the automated underwriter system. And it also we still have to find a bank that's willing to take a credit score lower than that. And it's also going to affect how much you're going to pay for your PMI and your interest rate. So keep that in mind. Great concept, but I don't think it's really going to change how conventional loans are done currently. And the banks have to agree with it as well. So that's in the headlines. That's something that people are getting very excited about. A lot of real estate professionals is sharing it, boosting it. Fannie, no credit score. But there are caveats with everything. There are pros and cons to everything. The pros are it's amazing that they're making conventional loans or their loan product available to everyone, no matter what your score is. That's great. But then you have to pay for that as well. So, all right. Yes, one extra payment a month. That's great. With a 30-year mortgage, if you make one extra payment per year, you can save. You can cut 7 years off of your 30-year term. So with the 50-year mortgage, I haven't done the math with that, but I'm sure if you make one extra payment, but I say pay towards the principal. Don't just go on your online portal and make a payment. Let me pay extra $1,200 if that's your mortgage. No, call them up. I want to pay some money towards my principal balance because, again, your interest is compounded monthly based upon whatever your principal balance is. So pay towards the principal balance goes down, and now you're paying less interest. All right, guys, I think that was all I wanted to talk about. Market is still strong. There's plenty of houses on the market. I'm here to help if you're ready to buy. If you want to be in your house by Christmas, you need to get started this week. You need to get started today. You can go on my website, approvemesaundra.com, and start your application. Mortgage experts, we are licensed in DC, Maryland, and Virginia. If you're buying a home to live in, then we can only help you in DC, Maryland, or Virginia. However, we have access to commercial loans. So if you want to buy a business or a property to run your business out of, then we can help you nationwide. If you want to buy an investment property, so you want to fix up a house and flip it, if you want to buy a rental property, if you want to buy a multi-unit property, we can help you nationwide. So no matter where you're located, if you want to do those two things, commercial or investment, I can help you nationwide. If you want to purchase a house to live in, I can only help you in DC, Maryland, and Virginia. If you live somewhere else, you see this, you don't know where to start, give me a call and I can refer you to a great loan officer wherever you are. We have connections with people all over the country. All right. Yeah. Yeah, that's what the bubble burst, because they're talking about getting, oh, let's talk about that real quick. They're talking about getting rid of the Consumer Financial Protection Bureau. That was created after the housing crash, and well, I don't know if it was created after. Let me not say that, but it was enforced more is to help protect consumers from those balloon payments and the adjustable rate mortgages that adjusted so crazy. They put stipulations on what the lenders can do to you and what kind of terms they can do to you. It's not only stipulations on us, but it holds the financial institutions liable. And they're talking about getting rid of that. So that could be a little scary. So you have to have the right professional on your team to ask those types of questions, because the bureaus that were created to protect consumers is maybe going away, which it'll be good for us to make more money, but my whole goal is to protect you guys. My whole goal is to promote generational wealth. My whole goal is to promote you getting investment properties and commercial properties, you being able to get residual income so we all can live a comfortable life. That's the goal. So I'm not going to set you up and tell you, to buy a house and you can't afford it or you're not in a good financial position. That would be bad on my part. I'm not going to be blessed for that. So, okay. Well, thank you so much, sir, for engaging with me. I appreciate you for joining in and asking the questions. You kept this live going longer, and I appreciate it. I appreciate anybody who sees the replay of this. And if you have any questions about anything that I've spoke about or anything mortgage related, real estate related, give me a call. My cell phone is 301-965-1155. I am here to help, and I appreciate you guys coming in. Have a great Saturday and enjoy the rest of your weekend. Bye.